What are the company's primary revenue streams and how sustainable are they? Laboratory offerings. Custom-made crowns and bridges contributed 64.75% of fiscal 2024 revenue with significant exports. Aligner solutions. Branded products like clear aligners and thermoforming sheets made up 28.12%, supported by vertical integration for quality and cost control. Pediatric dental products. Driven by the Kids eDental LLP partnership, this segment contributed 7.13%, led by BioFlex, a semi-flexible preformed crown for children, with design registration in India and global distribution across 81 countries. Does the company have a diversified business model? Laxmi Dental is an end-to-end integrated dental products company in India, offering a diverse portfolio that includes custom-made crowns and bridges, branded dental products like clear aligners, thermoforming sheets, aligner-related products, and pediatric dental products. The company is vertically integrated, controlling the supply chain from raw materials to distribution. They utilize a B2B2C business model for clear aligners, selling through a dental network of over 20,000 clinics and dentists. In addition to laboratory offerings, Laxmi Dental is scaling its branded products, having launched zirconia crowns under the name Illusion Zirconia. They also manufacture thermoforming machines and related products under the Tagless brand. These strategies reflect a diversified business model that leverages expertise in dental products and a strong partner network. What are the company's growth drivers? Laxmi Dental, India's only end-to-end integrated dental products company, is among the top 2 largest dental labs by revenue in FY23 and leads in profitability in the B2B2C aligner segment. With a vertically integrated portfolio of branded products like Illusion aligners and BioFlex crowns, it serves 20,000 plus clinics and exports to 95 plus countries. The company drives growth through digital dentistry, Scan Pro scanners, market expansion into Tier 2-3 cities, and a leading position in the fast-growing pediatric dental market. Strategic partnerships, operational efficiency, and experienced leadership further bolster its competitive edge in market opportunities. How does the current economic environment impact the company's industry? The economic environment offers both opportunities and challenges for Laxmi Dental. Global GDP recovery, rising dental health expenditure in developed markets, and U.S. industry consolidation favor its export growth. India's robust GDP growth and stricter quality regulations also provide opportunities, aligning with Laxmi Dental's compliance focus. However, global economic uncertainty, pricing pressures from competitors in the dental network, and exchange rate fluctuations pose challenges. With significant export reliance and a strong presence in India, Laxmi Dental must adapt to changing dynamics, manage competitive pressures, and leverage growth trends in India and international markets effectively. Are there any government policies or incentives that favor the industry? The current economic environment presents both opportunities and challenges for Laxmi Dental's industry. Global economic factors. Global GDP growth is rebounding at varying rates, with advanced economies facing slower growth compared to emerging markets, impacting international expansion strategies. Dental health expenditure in developed markets like the U.S. is increasing, benefiting Laxmi Dental due to significant export revenue. The U.S. dental industry is consolidating, presenting further opportunities. Indian economic factors. India's GDP is robustly growing, positively influencing consumer spending on dental care. Regulatory changes emphasize quality, which Laxmi Dental is adapting to. Challenges. Global economic uncertainty, pricing pressure from competition, and fluctuations in exchange rates could impact demand and profit margins. Overall, while growth prospects exist, navigating these challenges will be crucial for success. What is the market size and growth rate for the company's industry? The dental products industry shows robust growth, positioning Laxmi Dental to capitalize on favorable trends. The Indian dental consumables market is projected to grow at a CAGR of 10.5%, from USD 177.4 billion in 2023 to USD 356.8 billion by 2030. The Indian custom-made crowns and bridges market is expected to reach USD 3.1 billion by 2030, with a CAGR of 11.8%, while the clear aligner market is set to grow at 23.0% CAGR, reaching USD 569.0 million. The pediatric dental crown market in India is projected to grow at 14.5% CAGR, far outpacing the global growth rate of 7.5%. What competitive advantages does the company have? Laxmi Dental possesses several competitive advantages that enhance its market position and growth potential. As India's only end-to-end integrated dental products company, it manages the entire process from raw material manufacturing to product design and distribution, ensuring quality and consistency. It is the second largest player in the domestic laboratory business and the largest exporter, particularly benefiting from the rise of digital dentistry. The company has a diverse, vertically integrated portfolio, including custom-made crowns, aligners, thermoforming sheets, and pediatric products. With a large network of over 20,000 dental clinics built over 20 years, advanced technological capabilities, and experienced management, Laxmi Dental also enjoys first-mover advantages in branded zirconia crowns and clear aligners. Are there significant barriers to entry or high competition in the industry? Laxmi Dental market offers significant growth potential, but faces barriers to entry, including building a trusted dental network, high initial investments in equipment and facilities, and meeting stringent regulatory standards like ISO 13485. Competition is intense from global and Indian dental labs with extensive networks and advanced technologies, as well as branded product companies specializing in segments like clear aligners. Despite these challenges, Laxmi Dental's established dental network, integrated business model, diverse product portfolio, and focus on quality and technological advancements position it strongly to navigate competition and capitalize on market opportunities. How does the company rank against its peers? Market leader. Laxmi Dental is among the top 2 largest dental laboratories in India based on revenue for fiscal 2023. It holds the position of the largest exporter among Indian dental labs, primarily serving the US and UK markets. Clear aligner dominance. In the rapidly growing clear aligner market, Laxmi Dental is the largest and most profitable indigenous B2B2C company in India by revenue from operations in PAT margin for fiscal 2022. Are there industry-specific metrics where the company outshines? Vertical integration. Laxmi Dental is the only end-to-end integrated dental products company in India. This vertical integration, encompassing raw materials, manufacturing, and distribution, provides a significant competitive advantage in terms of cost control, quality assurance, and operational efficiency. Extensive dental network. With a network exceeding 20,000 dental clinics, companies, and dentists across India and internationally, Laxmi Dental enjoys a robust distribution channel. This network is a major asset in the B2B2C model, particularly for clear aligners, as it fosters trust and drives faster market penetration. What differentiates the company from its competitors? Laxmi Dental offers a diverse product portfolio, including custom crowns, clear aligners, pediatric dental products, and thermoforming sheets, catering to varied customer needs. Its B2B2C model leverages a strong dental network to build trust and differentiate from D2C competitors. With ISO 13485 certified facilities, MDR licenses, advanced technology, and a focus on quality, the company ensures high standards. Led by experienced promoters with deep industry knowledge, Laxmi Dental's vertical integration, robust network, and innovative approach position it for sustained growth in the Indian dental products market. Company analysis. What are the company's strengths, weaknesses, opportunities, and threats? SWOT. SWOT analysis. Strengths. India's only end-to-end integrated dental products company and second largest in the domestic lab business. With a diverse portfolio, 20,000 plus clinic network, advanced tech, and experienced management, holds a first-mover advantage in key product lines. Weaknesses: reliance on network expansion, regional concentration, lack of long-term commitments, U.S. entity losses, dependency on key personnel, and internal control risks. Opportunities: growing dental market, digital dentistry, Indian and global expansion, automation in manufacturing, and enhanced marketing. Threats, intense competition, regulatory changes, cyber risks, supplier dependency, economic shifts, and evolving customer preferences. Are there unique partnerships or collaborations? The company has a strategic partnership with a leading pediatric dental firm for the global distribution of Bioflux crowns across 81 countries. It also boasts a 20,000-strong dental network built over 20 years, enabling the distribution of aligner solutions in metropolitan and non-metropolitan areas. Collaborations with Indian celebrities as brand ambassadors enhance its visibility and patient flow. Additionally, a licensing agreement with Kidsey Dental LLP allows them to manufacture, market, and sell products in India under a profit-sharing scheme. These partnerships strengthen the company's distribution, market reach, and brand presence. Valuation of the company. Is the IPO priced fairly compared to peers? As per the offer document, the company has shown Poly Medicure as its listed peer. It is trading at a PE of 92.9 as of January 9, 2025. However, they are not truly comparable on an apple-to-apple basis. Risk factors in litigation. What are the key risks associated with investing in this IPO? Investing in this IPO carries a high degree of risk. The company's success depends on expanding its dental network and market share. Operational risks include geographical concentration, reliance on skilled personnel, potential product liability claims, and supply chain issues. Financial risks involve existing borrowings, the need for additional capital, currency exchange fluctuations, and contingent liabilities. External risks consist of economic and industry trends in India, political instability, and changes in regulations, and cybersecurity threats. The offer price might not reflect the market price after the IPO. Additionally, future share issuances could dilute investments. The company also faces competition, pricing pressure, and potential disruptions to global operations. The promoters will have significant voting control, and management will have flexibility in using net proceeds. Are there any ongoing or potential litigations? Yes, the company faces ongoing litigations, including criminal proceedings against the company, directors, and promoters, with allegations of corruption related to foreign direct investment. There are material civil cases, tax disputes, and other general litigations like consumer and labor issues. While no group company litigations are materially impactful, these proceedings could divert management's focus and harm the company's reputation and financial performance. The company has a policy for identifying and disclosing material litigation. IPO details. How much is the company planning to raise, and how will funds be allocated? The company plans to raise funds through a fresh issue of equity shares aggregating up to $1,500 million. Additionally, there is an offer for sale of up to 126,847 equity shares, though the proceeds from this sale will go to the selling shareholders, not the company. The company may also consider a pre-IPO placement for an aggregate amount not exceeding $300 million. If the pre-IPO placement is completed, the size of the fresh issue will be reduced by the amount raised through the placement. The net proceeds from the fresh issue will be allocated as follows. $195.71 million towards repayment / prepayment of certain outstanding borrowings. $375.66 million towards capital expenditure requirements for the purchase of new machinery. $350.199 million towards investment in certain subsidiaries for the repayment / prepayment of their borrowings and capital expenditure. The remaining amount will be used for general corporate purposes, which shall not exceed 25% of the gross proceeds. What is the promoter shareholding before and after the IPO? The promoters currently hold 36.19% of the pre-offer paid-up share capital, and the promoter group holds 56% on a fully diluted basis. Post-IPO shareholding details will be finalized before filing with the Registrar of Companies. The promoters and promoter group will retain substantial voting rights after the IPO, with dilution depending on the number of shares issued in the fresh issue and the offer for sale. What is the lock-in period for promoters? 20% of the post-offer equity share capital held by promoters will be locked in for 3 years, while the remaining promoter shares will be locked in for 1 year, excluding those offered by Rajesh Verslal Kakar and Samir Kamlesh Merchant in the offer for sale. The locked-in shares exclude those acquired through non-cash considerations or revaluation of assets in the last 3 years. The entire pre-offer equity share capital, excluding the promoter's contribution, will be locked in for 6 months from the allotment date. Financial performance. How has the company performed financially over the past years? The company's revenue grew from a $1,368.43 million in FY 2022 to a $1,935.55 million in FY 2024. It moved from a loss of a $186.79 million in FY 2022 to a profit of a $252.29 million in FY 2024, with PAT margin improving from 13.65% to 13.03%. EBITDA and adjusted EBITDA also increased significantly. ROCE and ROE showed substantial positive growth. These improvements stem from revenue growth, cost management, and profits from a jointly controlled entity. Are there any red flags in financial statements? While the company shows positive financial trends in FY 2024, some factors need consideration. The company has a history of losses in FY 2022 and FY 2023. There are negative cash flows from operating activities in FY 2022 and FY 2024. The company carries significant borrowings, totaling RR 420.25 million in FY 2024. Employee benefits expenses have increased substantially over the past 3 years. The company uses non-GAAP financial measures such as EBITDA, which should be assessed with caution. Related party transactions exist and should be carefully monitored. The company has not declared dividends. These factors should be assessed in the context of the company's future plans and the broader market. Management and governance. What is the track record of the management team? The company is led by a strong management team with significant experience in the dental products industry. Key leaders include Rajesh Vrajlal Kahar, the founder, chairperson, and whole-time director, has over 30 years of experience. He founded the company as a dental laboratory and expanded its reach internationally. Samir Kamlesh Merchant, the managing director and chief executive officer, has more than 20 years of experience and has diversified the company's offerings, overseeing digital initiatives and technology transformation. Dharmesh Bhupendra Dattani, the chief financial officer, has more than 15 years of experience. The company has also benefited from the support of OrbiMed Asia II, Mauritius Limited, a private equity investor associated with the company since 2015. The company's leadership team's experience is considered a key factor in the company's growth and strategy execution. The company's promoters have also been recognized for their excellence in the dental laboratory space. Are there governance issues or related party transactions? There are no significant governance issues, but related party transactions exist. Sales from these transactions contributed 2.47%, 1.83%, and 0.74% of total revenue in FY 2024, FY 2023, and FY 2022, respectively. Transactions include sales, rent, loans, and interest with entities like Kids eDental LLP and individuals linked to key management personnel. Some trade receivables from related parties exceeded 9 months, causing non-compliance issues. The company has committees to ensure governance and a materiality policy to manage conflicts of interest and outstanding dues. Transfer pricing audits ensure compliance with regulations for its foreign subsidiary. What are the potential returns for investors? The company has shown a financial turnaround with a profit of $152.29 million in FY 2024, up from a loss of $141.63 million in FY 2023 and $186.79 million in FY 2022. Revenue and profitability have grown consistently, with return on net worth improving from 60.47% in FY 2022 to 78.77% in FY 2024. The Indian dental market is projected to grow at an 8.0% CAGR until 2030, while clear aligners and pediatric dental crowns are expected to grow at 23.0% and 14.5% CAGR, respectively, in India. However, risks and market fluctuations remain. Are there institutional anchor investors? And what does this signal? The IPO may involve anchor investors who can receive up to 60% of the QIB portion. A minimum bid over $100 million qualifies an investor as an anchor investor. Shares can be allocated at the anchor investor offer price, not exceeding the cap price. 1/3 of the portion is reserved for domestic mutual funds. Anchor investors' participation, disclosed before the bid offer opening, signals confidence in the IPO and attracts other investors. They cannot bid through the ASPA process, and their involvement often boosts credibility for the offer.